Hi guys, it's Ryan from the Private Banker. Just doing a quick recap on the day for the crude oil and the SP 500. So first things first, just going to run through the trade on crude and how I approached the day and what we're continuing to see here with crude oil futures. So we opened gap up today. Opened the gap up about 120, 130 cent. Just quickly check this. It might even been more. So we opened at 82, around 82.54. Yesterday's high was around 81.51. So yeah, it's about 100 cent gap up, and on the day towards the highs of this current consolidation bracket that we're trading in for the last 11 days now. So off the open, what I was looking to do was to sell this back down into this previous range to fill this gap. So off of the open, there was an opportunity to sell. We had the overnight highs above us. Where was the overnight highs? Just checking here. Yeah, the overnight highs were around 82.72. So off the open, we were trading into this overnight high, and we started to see this sort of two-way trade come back into the market. And there was a skew on the Vwap. With what was going on, I was just looking to sell this back down and target the previous day's range. So off of the open, right here, I came in, I sold the 1.5 standard deviation with stops above the overnight high. That was my risk on the trade. I got some quick scales into Vwap, and that's pretty much it. We just see this two-way trade consolidation in the market. I mean, we had crude oil inventories come out, and we had obviously the FOMC minutes at 2 o'clock, and we just basically see this consolidation. We just couldn't trade below the mean price, and I was looking to target the developing value area low, and like I said, a gap fill and possibly the previous day's value, but we just couldn't see this happen. We just see this two-way trade balance in the market, and we just kept seeing these pullbacks to my entry location, and just no follow through. And what ends up happening here is it got to the point where we see just rising prices, and we see this expansion up, and I just decided to get out at this point. I mean, I sat there all day waiting for this to potentially break down, but we just couldn't do it. And after this happened, I tried to look to the buy side for the setups that we use, and I managed to get long off of RTH Vwap here on this pullback, and I managed to get some scales out into the overnight highs, into this 82.72, and then into the FOMC minutes. Obviously, I just closed out the position after we see this big reaction to the sell side, and no follow through to the buy side into the bracket high. So just pretty much not two scratch trades. I had some obviously good profits on the table from this with multiple scales. Obviously got my core position done with my 2/3 scales out, and then on the exit I pretty much just got a few cent on that, and then on this again I got my first and second scale, and then ended up breaking even on pretty much the core position. So just basically just banked my sort of 45, 60 cent scales on both of these trades. So I pretty much what's the day today? 120 cents. So I pretty much managed to average the day almost on the ticks that I banked on this trading day. So this is how we manage performance at the Private Banker. So obviously, if you're a forum member, you would know this. So that's pretty much it for crude. I mean, we came in, the dollar got smashed higher with the FOMC minutes, and there was just a reaction to the sell side on crude. And anybody who was accumulating longs here today, they got squeezed out into the close here. And we see this pullback and partial gap fill. So there is still a gap fill from there is still an open gap from 48 down to up to about 69. So there is about 20 cent gap here, and which I've still got labelled on my charts. And we basically just see a pullback to the 5 exponential moving average. So depending on obviously how we open tomorrow, we've seen these 3 days of one time framing up from the low of the bracket, and we have no follow through yet above the highs with any potential breakouts. So at the moment, obviously the overall context is we're still in this balancing range, and we're still seeing two-way trade in this current range. So until we see a breakout above or below, obviously the plan is going to be to sell the highs and buy the lows, and obviously keep an eye on these moving averages here. Obviously, we've got last year's highs up at $86 a barrel. We've got this previous sort of 2-day balance up here, and we've got this open gap up here. So just be interested to see how this continues. But just another day of pretty much just balanced two-way trade. I mean, the profile is pretty balanced. We've got this excess spike into K, so we just have to see how the market reacts on the open tomorrow, whether we open up inside the spike and accept it, or we reject it and start trading for then this volume between these 2 days now. Like I said, 3 days of one time framing, so have to see what happens. Just going to quickly touch base on the higher time frames. So we're still looking pretty rotation on the week. Values sitting inside last week's value, and we did see this imbalance. The market was trying to hold the 1.5 standard deviation with buyers, but obviously with the FOMC minutes and the dollar rallying higher, we've just seen this pullback on crude, so we might see a destination trade back down to the mean and back down to this sort of $81 a barrel, and potentially back down to 80.40. It just depends if we find any offer above this area, or we continue to hold the bracket and, like I said, trade with this two-way trade. So just have to see what happens here. I mean, I've already gone through the macro support on the forum and in yesterday's recap, so I'm not going to touch base on this any further. I'm going to quickly have a look at the SP 500. So we've been one time framing on the SP 500 now for 10 days, if I'm correct. Today we couldn't take out the low. I mean, we opened inside the day, and we took a peak higher above yesterday's trade, and into the FOMC minutes. We see this downwards grind most of the day, and then the FOMC minutes we just see this big spike down with this two-way trade. If we see here, we basically just saw a destination trade, and we just see some accumulation back inside of yesterday's value. So there was an imbalance here, but then FOMC minutes came out, they spiked it down, and they found some buyers back for a mean reversion. So pretty interesting day here. There was quite a large range, 23 points in the day. Nothing like we have been seeing with the huge volatility on the S&P, but so have to see how we continue to trade here. We've got like this 2-day balance now, so it'd be important to track this this developing profile. And again, the one time framing, and we're still trading above the fast time moving averages, and they are catching up. So if you open inside day tomorrow, and we could potentially see some more upside here. Again, we'll just have to see how this pans out. I mean, the FOMC minutes today were the Fed were ending the quantitative easing program with QE4, so obviously some of this has probably been baked into the market already, and just going to touch base on some high time frame stuff. So most importantly, the quarterly chart, seeing a similar pattern to last quarter, obviously a little bit different with the values, but we're seeing this two-way balancing market come into play now at these all-time highs. And we've seen this sell-off at the beginning of this quarter, and we pretty much just came down, we found some support, and we literally went from one side of the distribution bell curve to the other, and very similar to here. As you can see, we came down, we found support, and we literally came from one side of the distribution bell curve to the other. So we're now sitting at the upper end of the distribution bell curve for this quarter's developing value, and we're back to last quarter's value area. So be interesting to see here whether we see this similar thing pan out, but at the minute it's all eyes on these all-time highs at 20.14 and 7 3/4. And like I said, we are seeing this balance in this current balance in the market. And if we look at the yearly developing value, we can see that we came in, we pulled back all the way to this year's developing value area low, and we've just basically seen a rotation higher now. So you can see this upper distribution, this lower distribution, and this big line in the sand around this 1900s at the minute. If we take a quick look at some of the higher time frame stuff, I'm going to quickly touch base on the monthly, and you can see here that we've been in this bearish channel for since 2009, and this month we just see this big pullback to the mean of the channel, and we've seen it offer back to the highest. And this sort of 2020 level is going to be very important pushing forward here. I mean, we've got 2 days left of the trading month. We've got Thursday and Friday left of this trading month in October, and we're rolling over. It's just another quick look at the S&P on the weekly. We're looking at the SPX cash for this, just for these charts, but I'm just going to quickly touch base on the daily. So I mean, like I said, we're seeing this two-way trade bracketing starting to come in. Let me remove these. I don't know what these are doing on there. yes, we're seeing this two-way trade bracketing coming to the market. I mean, we're seeing these higher highs in this trend, and then we broke the trend, and like I said, we're seeing this balancing range come in. So the expectation here is to put in a high. I mean, you could just call this a head and shoulder pattern, but I mean, this is one shoulder, so we want to come and see a head put in, and then potentially a new high put in, and then if we're not going to break out and see a continuation higher, then we should see some balancing come in and potential a deeper retracement and correction in this market long term. We'll just like I said, have to see how this pans out, but you can see the one time frame and the strong move off this last fractal low support area. So again, all eyes on this 2014-15 area, and we'll just have to see how we continue to trade this into the end of the year. I mean, there's always that Santa Claus rally that everyone talks about on the S&P, so maybe we'll see New Year highs in the Santa Claus rally until the end of the year, and then we'll continue to top out in this market with potentially a correction in place. Anyway, I'm gonna leave it at that for the moment, and we'll touch base into the end of the week and at the start of next month. If you ever have any questions, do not hesitate to contact me at contact@leprivatebanker.com. Alternatively, you can just send me an email, a private message on the forum or Twitter, etc. Take care and goodbye.